LUNA Classic is one of the best performing tokens today, up over 60% against the rest of the market going down. Its price performance has been absolutely crazy, and this comes off the back of the news that they're going to be introducing a 1.2% burn mechanism to swaps. So what does this mean? Does this mean that LUNA will be burnt, inevitably pushing the price up and up and up? Or is this simply just FOMO and it will have, no real repercussions to the token price? That's what we're going to be discussing in today's video. I've got a chart which goes through the data of some price targets that LUNA Classic could potentially hit. And I also want to give you my opinion on what I think of LUNA Classic. Is this essentially now just a meme coin, or is there a genuine chance that there is some sort of LUNA revival on the cards? So let's get straight into the video. Dark LUNC said the LUNC burn is really almost here. This is one of those moments, one of those if I'd only bought $1,000 worth of LUNC in August 22, I'd be retired moments. I'm skeptical of this comment, but by the end of today's video, we're going to decide whether this is actually true, whether in a couple of years you're going to wish you had bought some, or whether it's safe to actually steer clear of LUNC at the moment. Just before we get into all the data, because it's a very, very interesting show. Remember, if you do want to buy, trade any coins, LUNA Classic included, you can sign up for a ByBit account, link in the description, and you get yourself a $4,200 deposit bonus, as well as access to Sheldon's VIP calls in the official Crypto Banter Discord. Also, there's a link to that in the description. So yeah, but you need a ByBit account to be eligible for that. So if you want to trade, even spot trade any projects, sign up for a ByBit account and claim that bonus. Let's get straight into it. So we all know what happened with the LUNA network. We know that the LUNA token itself lost over 99.9% of its value after the UST depeg in May. I know a lot of us were burnt by that. It was one of the most devastating blows to any project in crypto history. But what they've done is they've essentially embarked on this rebranding mission in an attempt to distance itself from the events that happened in the past, and also introducing new staking and new token burning features in order to win back investors. Now, firstly, straight off the bat, I don't think that it's possible to win back even 20% of the total investors that originally invested in LUNA, because people are so scarred by that token. It's going to be hard to get that mass adoption that they're trying to get. But I think what they're going after now is less demand side pressure, and they're going after more supply side initiatives to bring the supply down, which in order can spur on that demand side pressure. Because if the supply of a token reduces, the price pumps. That puts it into basically the top lists across all the exchanges. That gets some momentum going on Twitter. In fact, LUNC was trending on Twitter yesterday and today, and then that inevitably brings in that retail, that new crop of retail that wasn't previously invested, didn't previously get burnt, and they end up FOMOing back in. And to be honest, I'll explain my exact strategy at the end of the video. Some of these burn mechanisms makes me want to get back in. I already have some tokens, but I'm just considering maybe having a little bit of a play with a small amount of LUNC tokens here. But I'll get into why that's the case at the end of the video. So essentially what they did is they rebranded to LUNA Classic, which is LUNC. And there is a new chain, which is has the original ticker, the LUNA token, which is being headed by Do Kwon. So right now, the development and the governance of LUNA Classic, so the original LUNA that we're talking about in today's video, is currently run via governance via the community. So it's not run by Do Kwon. At least we don't know if he has any direct association. He very well may have tokens. In fact, I would suggest that he would have a lot of tokens, but I don't think he is active in the day-to-day running of LUNA C. He's more active in the running of the new LUNA chain, which is where he's trying to really push LUNA forward to become a new L1. This LUNA C token is different because essentially what they are aiming for is two things: staking and supply burn. So they actually made staking live as part of the V22 network upgrade, where you can get over 30% on your LUNC tokens. And over 402 billion tokens have been staked, currently equating to almost 6% of the total supply. So over 6% of total LUNC tokens are currently staked. And staking went live only 3 days ago on August 27th. And there's 182 billion tokens that were staked on day one here. So the average annualized reward rate of staking is 37.8%, which is among some of the highest staking payouts available amongst any coin. Obviously, staking rewards definitely shouldn't be a reason for you to invest in a project because they can be manipulated in many ways, whether that's via token emissions, whether that's by heightened fees for a period of time in order to get a higher annualized rate. There's many ways which they can manipulate the staking rewards. So this isn't the reason why LUNC is attracting a lot of interest right now. I'd say the main reason and the main topic of today's video and the reason why LUNC is back in the news again is because of this tax burn. This is the second initiative from the two main upgrades under V22 that is going to be launching this week. And they actually launched this a few days ago. And this is a tax burn whenever you buy and whenever you sell Luna. So I'll explain how this works in very simple terms. Essentially, if you swap Luna, buy Luna, sell Luna on an exchange, that exchange will burn 1.2% of the total transaction volume. So an exchange like Binance or KuCoin, they take their fees like they normally would with any token, but with LUNC, there's going to be an additional burn that the exchange will actually burn of those tokens every time there is a transaction. So the premise here is that the more people that trade Luna, the more people that buy Luna, sell Luna, or LUNC in this case is the ticker of the token, the more LUNC will actually be burnt because the 1.2% applies to both buys and sells. So for example, if you bought 1 million tokens, you would only receive 988,000. So anytime you buy and sell tokens, you're getting slightly less than you would be for any other token because not many other tokens have a direct exchange burn mechanism built in. So this is the first major change that LUNC wanted to adopt in order to start burning the token supply, because you guys know when Luna first crashed, when this token first went from, I don't know, $60 all the way down to 0.0001 cents, what happened was the total supply increased in order to try and defend that UST peg. Ultimately, that was an unsuccessful endeavor. So what happened was the total supply went from a few billion all the way to 7 trillion. So the only way that the team now sees fit to try and at least recover some sort of positive price performance is by burning more tokens. So this is the first step to actually doing that. And this step wouldn't work if exchanges didn't support this. So if they said we want to burn 1.2%, this wouldn't be possible if the exchanges weren't facilitating this, because at the end of the day, the exchange makes the final call over whether they will or whether they won't burn tokens. But Binance actually came out and said, CZ himself said that they will support the burn, which is big news because Binance is Luna's main market. This is the main exchange with the majority of the trading volume, and they are actually supporting this 1.2% fees. Not every exchange will support it. There have been exchanges coming out saying that they won't, but as long as the big ones do, then that's all that really matters from a burn supply side perspective. And Binance is supporting this, which is probably the biggest news and one of the reasons why this token has pumped so much over the last day, up over 50%, which is absolutely crazy. The second exchange that is supporting the burn is the KuCoin exchange. They're supporting the new upgrade, which involves the new deflationary tokenomics. So KuCoin is also supporting. So some of the biggest exchanges are now getting on board. I'd say the market generally follows the bigger exchanges like Binance. So having Binance supporting the burn is definitely a good sign for more exchanges to come on and support this in the future. But even if they are supporting the burn, and even if we know that 1.2% of the supply is being burnt, how will this affect the price? That is the question. How many Luna tokens out of the 7 trillion tokens can we expect to realistically get burnt over the next few months? Because at the end of the day, that's what's going to dictate whether this token can appreciate in price. It's whether this burn will outpace the amount of demand, because inevitably that means the token price will rise. It's basic supply and demand. So there's actually a graphic here that I want to run you through with some statistics on what could happen to the Luna token price if there is a certain amount burnt. So this is essentially a burn calculator, and I'll zoom it in a little bit more so you guys can see it more accurately. And essentially it dictates the amount of transaction volume that it would take to burn a certain amount of Luna tokens every single day. And then this third column and this fifth column are based on every single month. So it's taking the daily volume and timesing it by 30. So let's look at the total supply of Luna tokens right now. That is 7 trillion. The current 24-hour trading volume is 700 million. So if we lined this up on the burn calculator, and let's just assume absolutes for firstly before I get into the caveats, that all 700 million were on Binance, and this was all being supported. By the way, the burn doesn't go live for 2 days, so this isn't happening yet. This run up in price is happening in anticipation of the burn. So Binance hasn't started burning tokens yet. So I'm assuming this is happening today for the sake of the calculations here. So if 700 million were burnt in a day, this would be equivalent, let's round it down to 500 million, equivalent of a 60 billion token burn per day. That's 60 billion tokens out of the 7 trillion tokens would actually be burnt based on today's trading volume. If we go and we look at the monthly, so let's assume today's trading volume was replicated times 30 for a month. This would mean that 1.8 trillion out of the 7 trillion Luna tokens would be burnt. So you might be sitting here and thinking, well, that means within 5 months that all the tokens will be burnt. Wait, that can't be right. That's amazing. Like, let's ape in. That's crazy. And you'd be right for thinking so at first, but there are some major caveats as to why a graph like this, although providing a lot of hopium, is probably a little bit too optimistic. The first caveat is that this burn calculator calculates based on all variables being the same, meaning that the price is the same price given the amount of tokens that are burnt. We know this isn't true because we know that the more trading volume a token gets, especially with a token like Luna, the more variable that price will be, and it probably means the price is pumping. And if the price goes higher as a result of A, increased volume, and 2, increased burns, then it's only logical to assume that the price will go up. And if the price is going up, then this data can't stay the same because it essentially balances out. The same equivalent amount wouldn't be burnt if the price is going up based on the price being absolute, which means that you won't see an effective burn of 1.8 trillion in actual market conditions, because the price will go up and that will obviously affect the relative amount that's burnt. Because if the token of a price goes very high, then there'll be less investors willing to pay that amount for a certain price. Unless the price is at equilibrium between buyers and sellers, then this data won't stay absolute in all cases, because that's just how the law of supply and demand works. But then with the 100% circulating supply being burnt at one time, that's the second assumption that this graph is making. But we know that 100% of the circulating supply won't be burnt at one time. Why is this the case? Well, not all tokens are on the same exchange. You've got some on Binance, some on KuCoin, some on ByBit, but not all tokens are available on the same exchange with the same burn mechanism. And secondly, not all tokens are on exchanges. This graph is assuming 100% of the circulating supply will be burnt at all time. We know that's rarely the case. We know that a percentage of that circulating supply may be in wallets. Some people don't have them on exchanges. So you're essentially limited in the amount you can burn based on the amount people are willing to swap. So if we're hoarding 2 trillion tokens between us as a community, those tokens can't be burnt if they're in our wallet. They need to be swapped to be burnt. So the circulating supply could only be burnt if we actually, as holders, swap these tokens on exchanges. So that's one of the other reasons why this graph's too optimistic. But with those caveats aside, I mean, it's a pretty tantalizing prospect that potentially there could be 2.7, 3.6, 5.4 trillion LUNC tokens burnt. That's crazy. Out of the 7 trillion. As I said, in practice, it looks very different to in principle, but that is actually pretty crazy. And there's gain calculators here that will work out the percentage return that you can actually get on these tokens. And there are some scenarios, and I've seen some pricing models, for example, with the 10x or 100x, where the token price actually hits $1. Now, currently, it's at 0.0002 cents. I'm going to go out on a limb right now and dismiss the title of this video and say that we are almost definitely not ever hitting $1 on this token. That would be preposterous. Is it possible? Yes. I mean, people said it was impossible for Luna to go to zero. It did. Is it possible for it to get back to $1? Absolutely, to be honest, but it's not likely. So EV, expected value, and likelihood versus a possibility are two very different discussions. Can it get back to $1? Yes. Will it get back to $1? 99.9% says no. But I mean, it's still a crazy prospect that that's potentially on the cards. But there are more conservative price targets based on more realistic gains. If we line it up here on the chart, for example, if we look at this model here on the 30-day, potentially 11 cents, even 6 cents. I mean, 6 cents from 0.0002 is still absolutely insane. So, or even 1 cent, like that would be an incredible result. Once again, is that likely? Probably not. But I'm just explaining to you guys what is potentially on the table if this burn did take full effect. There is a lunacy burn calculator, which takes into account the amount of Luna being burnt. Remember, the burn doesn't go live for a couple days, given this Binance and this KuCoin exchange fee burn mechanism. There has already been a percentage of the total supply burnt using other mechanisms. So this isn't the 1.2% mechanism I've talked about. This is another way that they burnt tokens. And that has already resulted in over 3 billion tokens being burnt. So to this day, they've burnt 3 billion tokens, but that's a fraction of what would potentially be burnt once this new 1.3% rule steps in. Today, 398,000 were burnt as well. So if you do want to track this over time, this will start getting very interesting as we get closer to the date of this new burn feature. So I highly recommend checking out this website, especially in a couple days. So look, so we know that the burn will be positive from a supply and demand perspective. Like that's very, very clear by now. I guess the question now becomes, what is going to push new investors to get into the token? Because yes, you have great supply side tokenomics potentially coming in, but what is going to spawn new investors or incentivize new investors to actually purchase this token? Because when a price goes up, it doesn't just go up for no reason. It goes up because there are buyers on the buy side buying that token, and they are outpacing the amount of supply that's going onto the market for that token. That's how a token goes up in price. So in order for the Luna token to go up in price, you do actually need the token itself to be purchased on the market. So what will it actually be purchased on the market? Well, its alt rank for today is number 2. Its Galaxy Saw is 50 on Luna Crush. So it's the second most popular token on the market right now in terms of hype. So I think a genuine use case, and maybe LUNC fans in the comments right now aren't going to like this, but I honestly see LUNC as almost skirting down the lines of being a meme coin. I'm kind of viewing it similarly to how I would view a SHIB or a Doge, in the sense that, let's be honest, there's not that much happening on chain, and it would take a revolutionary scenario for developers that have already moved to other chains to come back and build on LUNC. So I don't view this as an L1. In fact, if you're going to build on an L1, you'd probably build on the new one, which is Terra. So if we're just looking at Luna Classic, the primary function now becomes speculation, and this now becomes a meme coin. And that is okay. It's completely okay to be a meme coin, because we know meme coins can still pump. So it's never wise to discard meme coins in terms of our bias. And you know, if you did, then you'd be missing out on some crazy gains across projects like Doge and SHIB. And crypto is built on memes. We know how important memes are. So if that is really the function of Terra Classic going forward, and this burn is one of the catalysts to get that retail interest back in, then I don't see a problem with maybe investing a little bit of capital here. Now, for me personally, I'm going to speak on personal terms, because I don't want to lead anyone astray, because you guys have to know that this is extremely risky. So I'm chucking some money into LUNC over the next few weeks. It has just pumped significantly. So maybe it won't be today. Maybe it's over the next couple weeks or so. I'm just going to chuck in some gambling money. And what this means is literally money I would be willing to walk into a casino and bet on the roulette table. That equivalent amount I am betting on LUNC. I've already lost enough money on Luna. I know a lot of you have lost money on Luna, so I don't mind losing, another bit of cash, whether that's $1,000, $2,000. For me, maybe for you, it's like $100 or $50. Once again, I'm not a financial advisor. I can't advise anything. I'm just going to take a tiny bit of a punt here, because in my opinion, it's probably asymmetric risk. So is the likelihood that this is just a pump and dump and it just goes back down? Probably. But is there also a chance that outweighs the possibility that it goes back down, that it could pump to the upside? I think the answer to that question is yes. And if the answer to that question is yes, then that is positive EV on expected value terms. And that means that technically percentage-wise, that is a bet that I'm willing to take. Now, how do you calculate LV? Well, I'm doing it completely subjectively. So I'm just going on a whim here and investing based on the premise of the new burn features and the new verified meme status of the Terra Classic token. But you have to work out whether you think it's positive EV, and if it's not, then you wouldn't even bother putting money in. But I'm putting gambling money in just for a bit of fun over the next couple months, just to see what happens. And if you did want to buy tokens and stake them, you can actually do so on stakingrewards.com for a 38%, which is pretty decent. And I think it's one of the other reasons why people are incentivized to stake some LUNC here, because the reward is pretty good for staking. It's one of the higher staking rewards I'm seeing amongst multiple tokens. The LUNC DAO, which is one of the LUNC validators, which they take Luna, they stake it, and then they use their yield to burn more LUNC. If you stake in the DAO, you're contributing to the burn. They've gained a lot of traction with over 50,000 followers. And they said 3 months ago, we saw potential for LUNA Classic to rise like a phoenix from the ashes. That's why we created the DAO. Today, the milestone of staking was reached. If we can achieve this in 3 months, imagine what we can achieve in 1 year. And that's actually true. That now over 6% of Luna is being staked. That's quite a large amount. And if that keeps on pace in line with the Luna burn, then I guess from a supply side, that is a very positive thing. I have the right, and you all have the right to remain extremely skeptical, though, when it comes to Luna. I am an extreme skeptic of this Luna Classic token. In fact, if we look at utility, there's not that much going on chain. Like, let's just look through all the projects. We've got Anchor, that's dead. Astroport, actually hearing some rumors that they could relaunch in some way. Not sure it'll be on LUNC, though. It might be on the new platform or Cosmos. Chai Payments, well, that was dead in the water a while ago. Loop Markets, still a little bit going on there. And then there's a bunch of new projects which have essentially launched to take advantage of this, of the new mechanisms. I definitely think that what we may see if this Luna meme status continues to... and I'll zoom in so you can see that it's ranked number 2. If this continues to be the case, then we could see a Doge chain effect. And what the Doge chain effect is a bunch of new projects launching on the chain in order to capture a lot of quick liquidity. So Doge chain had a lot of those projects offering 20, 30, 40,000% yield in the first day, and they absolutely rocketed and they pumped because there was a lot of memers coming on and speculating. Maybe we do see a rush of projects building on LUNC just to take advantage of some hype, however long that may last. But yeah, until now, it just remains gambling money. Don't get your hopes up for $1 Luna. I certainly am not. Don't get your hopes up for a 1 cent Luna. I certainly am not. Don't get your hopes up for a 0.0001 cent Luna. I'm certainly not. But there is still a chance that it happens, and that's why I'm willing to put just a little bit of money in. If I lose it, I lose it. If it wins, hell, it could 50x. So let's just take the bet. If you're taking the bet, let me know in the comments below. Let me know if it's something you're interested in or not. I think both opinions are completely valid. I think if you come to me and you say you're not buying, I 100% respect that. 100%. If you come to me and saying you are buying, I actually also 100% respect that. There is no right or wrong. I think both solutions are valid. Both outcomes are valid. So yeah, hope you guys enjoyed this video. Smash the like button, subscribe if you're not already. But I do want to hang out with you guys a little bit longer and answer some questions because I know you guys probably have some questions about this or any other tokens. So there's a link in the description to my Instagram. After each show every day, I go live on my Instagram and I talk about the market. So and I also follow some people back. So link in the description to click on my Insta, and I'll be doing a live stream Q&A. As soon as we finish this show, I'll hop onto Instagram and go live and follow some of you back. So yeah, if you want to chat with me over there, come join Insta. If you don't, then I will see you tomorrow at 7:30 p.m. EST, continuing with the daily show. All right, cool. Catch you in the next one. Peace.